Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer, and today we have kind of a special stock that I'm going to take a look at for everybody, Mercadolibre. This one came in by request down in the comment section of one of my other articles, and normally for non-S&P 500 stocks, I keep those exclusive to Patreon or the full Cyclical Investors Club service over on Seeking Alpha. But I've decided to kind of make an exception for Mercadolibre because I've been talking a lot about buying international growth stocks in this environment that we've been in lately. And I've owned Mercadolibre for a long time, almost exactly 2 years now. And since somebody asked about it, I thought this is really a perfect example of the type of stocks that we've mostly been buying in the Cyclical Investors Club. We have been buying some actual cyclicals too, but this is kind of the type of stock that where I think you can pick some value out kind of around the world in various places that are going a little bit under the radar. But Mercadolibre is big. I've mentioned that I owned it before in various places. And so I thought, well, this will be an actual good example of like what I can show of really what I'm looking for when I'm looking for an international growth stock and the types of pattern and kind of thinking behind the other stocks that we're buying in the full Cyclical Investors Club service. So the link to the full service will be down in the description over on Seeking Alpha. If you join Patreon at the $5 tier month level, you can get a big discount if you ever decide to join the full Cyclical Investors Club service. So that will be down there too. And I also have a 25% off link for Fast Graphs if anybody wants to try Fast Graphs. They have free trials and stuff, so you can try it out, see if you like it. And I'm going to be using that in this video. As always, this is not individual investing advice. This is just how I analyze stocks. And this is going to be really how I think about. I'm not going to get into the specific details of my strategy because that is exclusive to the service, but I'm going to get you like 80% of the way there because it's really more about how I'm thinking about it, the structure, the type of strategy, the type of approach that I'm just generally taking. So a little bit of history. I'm going to shrink this down a little bit. Maybe. There we go. I'm really focused on kind of the post-pandemic era here or time period because we had really kind of an IPO boom right after the pandemic starting in mid 2020 through like 2022 where literally thousands of IPOs and SPACs and other sort of companies went public in various ways. And most of those are junk. A lot of people have figured that out now. But amongst all those thousands were some pretty good stocks. And then there were also some good companies that were already public, like Mercadolibre. They got bid up to like really high levels and then they crashed. So the opportunity that I saw coming, I didn't even have a growth strategy until around 2021 because I could see that this crash was coming or likely to come. And I figured there's probably some good companies that are going to be good growth companies that are going to be in this mix. And I didn't really have a strategy for early stage growth companies. Most of my other strategies are pretty conservative. But I saw an opportunity there that if I could come up with a good strategy of selecting the 1 in 100 really good companies that were likely to overshoot to the downside, that I could potentially really benefit from that. And there were some other benefits. So really I'm trying to capture 5x, 10x type returns over the next 10, 15 years with these type of picks. Now, Mercadolibre is on the big side. I generally think of these in terms of can they do 15% earnings growth on average for 15 years in a row? It doesn't have to be in a row, but on average over the next decade and a half. If they can do that with lots of confidence, and it's not like a small cap or particularly speculative business, if it's a pretty big, stable business like Mercado, then that's a kind of a one category of these stocks. And the other ones are much smaller businesses, and those ones offer potentially bigger returns, but also potentially bigger losses too. A growth strategy, you have to, if you're really talking about more earlier stage growth companies, especially the ones that just came public since 2020. You're going to have a higher failure rate. The idea is that the winners you get some huge winners in there that make up for those failures. So that's kind of the mentality behind it. And then the other mentality is this is a buy and hold strategy. So, and it's actually kind of nice because, so basically I set aside 30% of my portfolio for this particular strategy. And when those 30 positions, I take 0.5% positions now too. So I guess technically it'd be like 60 positions, but potentially, but a lot of them are 1% positions. So once that 30% is full, then if I select a new one, I take the worst performer off of that, whatever I've been holding for a couple years. And I definitely have, 5 or 6 that are really poor performers. So I haven't quite filled this strategy out yet over the past 3 years. It's just been kind of a slow addition. But we're getting close. So before too long, when I add something new, I'll be getting rid of one of the losers as I add it. So, but once the stock is purchased, unless it ends up becoming one of the losers that gets replaced by something new down the road, it's buy and hold. So I really don't even, unless it's like an accounting thing. I mean, there are weird things that come up sometimes, or I made a clear error of some kind, usually some kind of mathematical error or something. Unless it's something weird like that, it's mostly a buy and hold strategy. I don't sell any of these based on valuation after I buy them. So once they get bought, I kind of just ignore them. And if they get overvalued, I just assume, look, way down the road, as long as they keep growing, it all work itself out. So it's a nice strategy in that respect, in that I have hardly looked, other than doing regular earnings updates and so forth, I haven't really looked at Mercadolibre since I bought it. But so here's what it looked like when I bought it. It had come off this giant high, and then it had formed a bottom here. Earnings were, I didn't know they were going to be this good this year, in 2022. But earnings were still growing, so it looked like earnings were okay. It was just a valuation adjustment, and then the stock looked like it had made a bottom and started to rise. And actually, it was August 5th, 2022. So it was about 50% off its highs when I bought it. But and if you look at the valuation at the time, it traded at 160 PE ratio. So it wasn't like super cheap, but the growth potential was there over the long term. And usually what I assume is 20% growth, earnings growth or revenue growth or whatever, some kind of profit metric over the next 10 years is kind of what I'm looking at. So I don't really assume much more growth than that. But typically if they can do that, the valuation looks reasonable. So up here, the valuation at 4,000 times did not look reasonable to me. But when we got down here, it looked reasonable, and all the other chips that I look at, all the other factors I look at look good. So basically I bought it, and as soon as I bought it, the stock fell like 30% or something. But again, it's just a buy and hold. I place my bet, see what happens. And the overall trend, even though it initially fell down, and I certainly didn't buy it exactly at the bottom, is up like 60% over 2 years, which is great, like 30% a year, something like that. And the upward trend looks pretty much in place. So the stock is actually still a buy. So that's another reason why I thought I would make a video, because it's kind of right on the borderline of where I would buy it right now. It is a bigger business, so I don't know. It really needs to be like a long-term thing. But you can see that from the time I bought it, the multiple was like 160. Now it's only 60, under 60 actually. And earnings are still expected to grow, if we pull forward this year, like 35% a year for the next couple of years. So you could see how, okay, maybe they can grow 20% a year for the next 10 years, and that would justify a 60 PE, especially if they can actually hit these 2 years of like 35% growth. Now, the danger is eventually at some point that PE is going to compress down to at least 30. So, somewhere baked in there, you got like a 50% compression that's going to happen. But we don't know when that's going to happen. Just like when I bought it here, the earnings have, more than doubled since then. So it's not only have you gotten stock price appreciation, but the PE has compressed along with it. So that's like ultimately what you want. You want the earnings to grow quite fast and to compress that PE for you. But, if earnings slowed to 25% in 2025 instead of 35%, that's still great. Stock price would probably trade down quite a bit at that particular time. And the idea is, I just say I don't know when those are going to happen. And I'm just making a long-term bet. And then if it does slow down, well, maybe that means they can keep a steady earnings growth going and not super high, but maybe they can grow longer. I just don't try to predict that with these. I just say the elements are in place for very long-term growth. I would also say that when you look at like Amazon, we can see a model there where when you get all this customer data, like from from a big online retailer, and you have all these eyeballs and these people that are using your service, there's a lot of data there that you can do a lot of different things with that are really hard to predict. Now we have AI and so forth. And the more of those things that you have, the more valuable that data and the way that you can use it and the adjustments that you can make. So there's a lot of intangibles there in the future where I really like pretty much all platforms for that reason, the big ones, whether it be, so I'm long Meta too, obviously Google's a good one, Amazon, I don't own those yet, but when you have so much money and data, you can maneuver pretty quickly into new trends and things like that, stave off competitors relatively easily, or at least you have a little bit of an advantage, I guess, to be able to hold that longer term, rather than if you compare it to like a small medical device company or something like that. I mean, it's just a different type of thing. I think there's a little bit more of a moat once you get like a big business like Mercadolibre has. But even though they're big, I mean, what's their market cap? Even though they're big, it's still only 83 billion, right? What's Amazon, just for reference? I think they're in the trillions. We'll call it 2 trillion. So that's 20 times bigger, right? So they're big, but there's growth opportunities there. I also like that it's outside of the US. If we get a weaker dollar at some point, you could potentially get a tailwind for that. If nothing else, you get like diversification. So there's all these kind of benefits I think that go along that would be a good addition. It's under the radar of a lot. Most kind of retirees, kind of older, like Americans, they are leaning more into businesses that they know that are like domestic, or it's just an S&P 500 type of a thing. So if you can move, and they have a lot of money, like a lot of investable money, like most of it really. So if you can find something that hasn't been picked over like a million times, that isn't like super popular, that nobody's gonna sell and give you like a cheap price on ever, that has future growth, that's a little bit off of the mainstream like radar. To me, that's a really good like portfolio addition. So another benefit. So this is kind of the quintessential example of a bigger business that I like. But you can take this pattern, and if you shorten it up a little bit, to maybe just before the pandemic, and you go out, you can find smaller businesses that have the same thing where they IPO'd, they sell off like 80% or something, and maybe they weren't even earning money at the time, but now they're starting to actually earn a little bit of money. The stock prices maybe bottomed a little bit. It looks like their business is pretty decent. It's maybe pretty small with a larger addressable market. Maybe it's outside of the US, so it has a little bit of diversification, but nothing too crazy. I haven't been investing in China. So when I say outside of the US, it's pretty much ex-China for, I have a whole video on it. If you want to go look it up, you can. So it's not like I'm actively necessarily looking for outside of the US, but these are they're coming up on my radar because they're cheap, like relative to the potential growth. And then I just kind of like having that extra diversification when I can find it. It's like a little bit of a bonus, I think. And I'm finding that they kind of fit like a pattern every now, to some degree, where you can tell, oh, well, this isn't like a brand name everybody in the US, every 60-year-old in the US knows, it's not McDonald's, Coke, Nike, Disney, all the ones that everybody grew up with and the brand names that they know, Walmart. And so it's a little less comfortable, just a little bit more under the radar for just kind of the average retiree who's looking to invest safely, to feel good about their retirement. These aren't the type of stocks where they're really aggressively kind of looking. And so they seem to be better deals. I mean, time will tell if they turn out to actually be better deals. But I've definitely have some evidence. Like Mercado, I've had some losers for sure. But Mercadolibre is not the best performer of these growth stocks that I've been able to find. It's kind of right in the middle of where they are. Some are, 100% returners in a year or two. And then I have some, especially when I first started doing it, because I started buying right in here. Actually, a little, yeah. Before kind of the bottom of this, I started getting it a little bit early, but we made some adjustments. And really, since like 2020, the past like 2 years have been pretty solid. A lot more big winners and a lot fewer losers. So it's going pretty well, and they're still and with the volatility we're seeing right now, or we could even see a little bit more. I think we're gonna keep seeing a few of these opportunities. Last month, or 2 months ago, I think we bought more stocks. I don't buy very many stocks, honestly. You've seen on this channel like one per quarter is what I've been sharing from the S&P 500, but I think I had more in May than I had since March 2020 in a single month, maybe at least since 2020 in a single month. So, and it wasn't like a ton, but it's like when you're not really finding anything and then you're starting to get like a trickle of, they're starting to trickle in a little bit more, you can kind of see that they're out there. So if you're interested in checking some of those out, I have a spreadsheet that has them all in it. So you can go look at them, see which ones look good, and do some research and see if any of them look good for you. All right, that's it. Mercadolibre, I consider it a buy here, long-term, buy and hold. The valuation is right on the dot edge right here today when I just looked at it in my spreadsheet. So I thought, and then I looked at my whiteboard and it was next on the list. And I thought, I'm just going to make a video for everybody with a real example of a real stock to show where I think the most of the value is in the market right now. And so this was a good example. All right, if you found this useful, hit the subscribe button, hit the like button. If you have a request, let me know. I still have a few left on this list, but I'm getting pretty low. And then I think I'm going to start adding some new types of content to the channel too, but I just haven't figured out exactly how I'm going to do yet. But we'll have some fresh stuff coming in. I've had almost a year now. In October, it'll be a year where 90% of what I'm putting out is individual stock analysis. I really wanted that to be the base of the channel because I think a lot of channels lack that. There's the more interesting stuff is always macro, but I find that the macro people lose people the most money most of the time because they don't know how to do like a basic valuation of a stock a lot of times. But they are very entertaining and popular to listen to. I like listening to them and hearing people's different views on bigger picture things. But I always feel like what's lacking is like an actual basis in valuation instead of just stories and narratives. So I try to flip that around and start with the valuation. Then we can talk about big picture things and kind of layer that on top. So some of that's coming up. And I'll see everybody later.